on Business Incorporated today. Fitch Ratings affirms the African Development Bank's rating at AAA with a stable outlook. Tunisia reports 22.9% increase in investments for 2021. Uganda tax enforcement recovers 651.7 billion shillings for 2020-2021 financial year. Hello and welcome to the program. I'm Ini John Michael. Well, let's head to the markets. Here in Africa, Nigeria, the market is open, and as at intraday, it was trending in the positive terrain. It was up 0.07%. South Africa took a much greater gains at that time. The Osha index was up 0.92%. Egypt remains close, while Kenya ended Thursday's session positive 0.07%. Well, in the Middle East, it's still a very long holiday. The markets are still closed after the Eid al-Fitr. Well, we're moving over to Europe now, where the Pan-European Stock 600 climbed 0.5% in early trade on Friday, with autos and basic resources adding 1.3% to lead gains as all sectors and major bosses entered positive territory. Well, we're going to have more from that region. We have Christy joining us from Frankfurt to tell us what's going on at this time. Hello, Christy. Good afternoon.
Hello, good afternoon.
Yeah, good to have you on the show.
Yes, we're certainly seeing
a new report shows that the Eurozone economy has grown at its fastest rate in 21 years as countries around the bloc reopen. With this rise in the Delta variant, COVID-19, will it spoil this streak of growth?
Yeah, it's a great question. I mean, as you said, and as the report showed, we've seen some of the fastest growth in the history of this measurement. And that has a lot to do with the fact that the lockdown, countries around the EU have been coming out of lockdown. Particularly the service sector has been picking up a lot. I mean, that area took a really large hit during the height of the coronavirus pandemic here in Europe, as restaurants closed, hotels, shops. And actually the growth we're seeing there is doing a lot to counterbalance a lot of the sluggishness we're seeing in the industrial sector, which is still struggling a lot with bottlenecks. Now, yes, of course, the Delta variant is of large concern. The swiftness with which it is spreading is already causing a lot of different countries to go back into lockdown. Just yesterday in Germany, we saw a report published, strategy for what Germany will do with a potential fourth wave this fall and winter. Of course, if the restaurants and shops are forced to close again, if people are going to go back to working from home, this will of course have an effect on the EU economy and on the global economy as well. So it's certainly an area to watch.
Yeah, but this has not stopped the takeoff of electric vehicles. They're taking off in Europe, with sales doubling in the second quarter of the year. So far, electric vehicles have made up only a small part of European car market. Are we reaching a turning point now?
It's certainly an interesting moment. I mean, what this latest data showed is that electric vehicle registrations doubled in the second quarter in the Eurozone to nearly 8%. And that's on top of that, we also saw strong growth from hybrid cars as well. And then at the same time, we saw actually a decline in registrations from cars that rely on non-renewable fuels, on diesel and on gas. These dropped a combined 20%, so dropping from their 80% market share of registrations to 60%. So we're certainly seeing some sort of change, a changing tide. There's a few reasons for this, actually. I mean, part of it is regulatory, the EU really throwing its weight behind the transition from brown energy to green energy. And we're also seeing a change in consumer trends as well. I mean, we're seeing a lot of extreme weather patterns both here in Europe and around the globe just in the last weeks, and there's a real increased sensitivity to or a feeling of urgency for some people to move to electric vehicles. So I think it's fair to say that there is a changing tide taking place.
Okay. Then the issue of semiconductor manufacturers have signaled that the global chip shortage may be coming to an end. What does this mean for Euro's goal of increasing chip production in the bloc?
Right. Yeah. So it's actually a pretty complex situation. On the one hand, we have, in Taiwan, one of the world's largest semiconductor manufacturers, saying that they see an end to the chip shortage in the second half of 2021 already. So just a few months away. At the same time, we actually heard just a few hours ago from Intel in the United States, another key player in this industry, that they don't see an end to the shortage for another 2 years. So this is a bit of a mixed message for consumers, or for manufacturers, I should say. Who are really suffering under the supply chain disruptions caused by this shortage. So what this does mean, though, is for this EU initiative, basically the EU has said it wants to get involved in more at-home production of these chips, saying that it wants to double its output of semiconductors from 10%, which is its current rate, to 20% by 2030. So just within the next decade. But this initiative is something that critics say is going to be incredibly costly and will be a huge game of catch-up for Europe to meet the level that Asia or countries like the U.S. are currently producing at. Europe is pretty strong in producing chips for things like cars, which is a key industry, but it's quite behind when it comes to the more complex chips needed for computers, for smartphones, which is really a huge bulk of that industry, as you can imagine. So it's going to be an area to watch. It's going to be an area that's going to have a lot of money on the table, and the outcome is currently unclear.
Yeah, it's unclear, but I mean, you mentioned money, and I'm sure that would attract a lot of investors there. Well, thank you so much, Christy, and enjoy your weekend.
Thank you.
So moving on now, we head to the UK, and we've had a lot of data coming from the UK from this morning. Juliana spoke a little bit about that with Chimezie in the morning, but I know she has an update for us. Hello, Juliana. Good afternoon.
Good afternoon, Innie. Thank God it's Friday.
Thank God it's Friday. Well, how are the markets reading the PMI? There's the sales data. There's data's everywhere. What's going on?
Yeah, it's been an interesting week in London, hasn't it? The FTSE looks like it's going to be heading into the weekend in positive territory, which is good for investors. The FTSE All-Share Index has gained about 15 points this week. But we have had a mixed bag of data. Of course, Monday, Freedom Day, was supposed to be a cause for celebration, but it was anything but that. We had 3 ministers in isolation, and then the leader of the opposition in isolation. And then, of course, we've got these rising Delta variant COVID cases. So that's not been great. And then having a look at consumer confidence as well. Earlier this week, we had information from the Bank of England showing that debit and credit card purchases are down, the first time we've seen that. And then this morning we had really disappointing PMI data, which has a forensic look at the private sector as it pertains to manufacturing, construction and services. Now that came in at about 57.4. This is the lowest level we've seen since the reopening started in March, and it has caused a lot of observers and economists to question, is this Q2 GDP quarter going to be as strong as predicted? And to be honest, as much as is needed. We had May GDP figures in showing that they were 0.8% growth, still not as high as it would be. But then again, there are some positives. So the silver lining from today's data has got to be the retail sales data growth of 0.5% above the target of 0.4%. A lot of this has got to do with the Euro 2020 tournament. I've just been watching the Olympic Tokyo opening ceremony. So I think a lot of retail bosses will hope that that will be getting people out, people are buying again. But we end it on a positive note, because the FTSE All-Share is up 0.74%. The FTSE All-Share 100 is up by 0.62%, and the FTSE 250 is up by 0.80%. In the currencies market, the British pound is enjoying its rally on the US dollar. That's up by 0.35%. It's also up on the euro by 0.24%, and the British pound today is up on the Japanese yen by 0.28%.
Well, seeing that we had a lot of data this week, what's the outlook for next week?
Pretty quiet next week. There's just a couple of things on the radar. First of all, we're going to have our first glimpse of house prices in the month of July. Again, we've discussed this extensively, how house prices are surging. I believe at the moment it's about 13.7% higher than it was last year, which is good. Month on month, we also saw a massive increase. But of course, the stamp duty, which can save people about up to £30,000 when you're buying a property, that's now been scrapped. It was put on hold and it was paused up until £500,000 was spent on a house, but that's all gone now. So it'll be interesting to see whether or not house buyers have still been purchasing in the month of July. And then also as well, we're going to be having a look at car production. Car production numbers, incredibly important, especially as we're trying to transition from petrol and diesel models into electric models. But there has been that chip shortage, hasn't there? So lots of car plants have had to shut down. So yeah, it's pretty quiet week next week. I suppose it's all going to be about COVID. And then we've got those two sets of data too.
Yeah, well, talking about COVID, supermarket depot workers and food manufacturers will be exempt from quarantine rules as the government tries to prevent food supply problems. But how is the government balancing this with public health safety?
Well, gosh, I'm not sure if they are balancing it very well, Innie, but pingdemic, as it's been called, to be honest, I do talk about that on Channel's Business Global later on with Simon Pusey. We've got a really good in-depth discussion about that. But it is a massive cause for concern in this country. And unfortunately, even as the world looks in thinking that the Brits have all gone a bit stir crazy, it does appear as if the popular opinion is the NHS Test and Trace app isn't working. I think people would rather be going out, using their common sense to make sure they stay safe, but they don't like the app, and it's led to millions of people being isolated. Are they isolating because they've got COVID? No, they could have been within a certain distance of somebody who's got COVID, and we're not even sure whether or not that's the case. So this has caused so much concern, and there have been so many images doing the rounds on social media showing empty shopping aisles, petrol stations that are having to close, some sort of department stores and warehouses having to close because it's shutting down the entire place. Now the government have been forced into putting some key workers into to be exempt from pingdemic. The list is very long. It's not the same as the key workers who were deemed to be key workers during the first and second and third wave of COVID. This is completely different. So different, in fact, that people have called it an absolute shambles. Some business leaders have said the government clearly don't know how food supply chain works, because if they did, more people would be on the exemption list. So it's all up in the air at the moment. It's been an absolutely a horrid week for Prime Minister Boris Johnson, and having to grapple with the fact that, yes, we want to reopen the economy, but of course, as soon as you reopen, people are going to get COVID, because unfortunately, the disease doesn't stop when people want to go back to work.
Yeah, we'll certainly look forward to that discussion that you had with Simon, later on today. So we'll get more details on that. Thank you so much, Juliana. And do enjoy your weekend.
Thanks.
So shares in Asia Pacific were mixed on Friday as investors monitored Chinese tech stocks in Hong Kong after regulatory concerns resurfaced. At Friday market close in Hong Kong, shares of Chinese tech firms listed in the city tumbled. Hong Kong's Hang Seng Index fell 1.45% to 27,321.98. The broader Asia-Pacific markets were mixed on Friday. In mainland China, the Shanghai Composite fell 0.68% on the day to 3,550.40, while the Shenzhen Component shed 1.53% to finish the trading day at 15,028.57. South Korea's Kospi closed 0.13% higher at 3,254.42. In Australia, the S&P AX 200 ended the trading day 0.11% higher at 7,394.40. MCSI Products Index of Asia Pacific shares outside Japan fell 0.68%. Markets in Japan were closed on Friday for a holiday. We'll take a break now. When we come back, we'll head straight to the African continent. To stay with us is Business Incorporated on Channels Television. Yeah, welcome back. You're still watching Business Incorporated on Channels Television. Now, farmers fear a risk aversion, lack of trust, weak planning, corruption at different levels, and weak regulation in the provision of agriculture inputs are a number of challenges in the African food system. For sustainable growth of the African economy, significant investment and creative innovation in agriculture are needed. But where will they start from? The acting managing director of African Green Revolution Conference, Ms. Jennifer Barn, joins us to share her thoughts on this. Hello, Ms. Barn. Good afternoon. Thank you for joining us.
Good afternoon. Thank you for having me here.
Yeah, you're welcome. So, from your perspective, how connected and coordinated is the African food system? Is it organized enough to be referred to as a system?
Well, in order to be a system, it's not really a qualitative measure, isn't it? Or different elements of food value chains of the economic environment of consumers markets connected across the continent? Absolutely, yes. Are they functioning in ways that we would like them to function so they can bring food security and economic security to Africa and its population? Definitely no. There's still a lot of work to do. We have made quite some headways in the past decades, but the gap between what needs to be invested in order to ensure that we can reach our SDG goals by 2030 is still significant. In addition, COVID has amplified not only the weaknesses, but also risks to widen that gap further. So in that sense, yes, we have a system. Is it optimally functioning? No, not yet.
So, from your opinion now, what are some immediate actions and steps to be taken to accelerate the progress towards what you have said, making an impact and bringing food security to the continent?
I think there are a variety of interventions and actions that are required, and that's why a systemic approach is so critical. It's not just about an intervention here on the farm or about ensuring that we have roads there. It's really a coordinated effort by all the critical stakeholders. And I think point number one is we should start thinking about transformation of this continent and food security in terms of food systems thinking. The focus on productivity and yields, etc., and everything that's happening around the farmer is just not sufficient. We have to look at how our value chains coordinated, how are all the different actors from the access to market, the traders, the entrepreneurs connected, and all the facilitating infrastructure around that. So I think that systems thinking around interventions in food and agriculture is quite critical. I think another level is just the economy and enabling environment of the agriculture sector, which is quite critical. How far are we progressing with policy harmonization? Think about the opportunities of the Africa continental free area. Those can open up significant opportunities for our farmers, but it requires really a coordinated effort. It requires government and their partners, also the private sector and other actors, to start prioritizing agriculture and also to start living up to some of the commitments that have been made. Think about the Malabo Declaration and the 10% of investment of government budgets into the agriculture sector. So it's a combination of systems thinking, coordinated efforts, the prioritization of agriculture, and with that prioritization comes the commitment of resources, expertise, and know-how to the sector.
So, I mean, you noted quite a lot of things, and one question will be who will bail the cat? So who should be this coordinator? We have the AFCFTA, like you mentioned. We have a lot of programs, and we have the comparative advantage of the various countries. Where should we start from, or where are we now? Where should we go from here?
Well, I think one point, and that is why we as the HRF think it's quite critical to convene all of these critical stakeholders and actors in the ecosystem annually and throughout the year to talk about all these different issues, to help prioritize and shape the action agenda around agriculture. So I think that effort of coordination first starts with a leadership commitment. We're expecting close to 10 presidents at the HRF in September, later in Nairobi. This year, we are also expecting, we're inviting 30 ministers and also over 100 corporate leaders to engage in dialogue around all of these key issues and interventions to exchange thoughts, to identify priorities, but also to commit to an action agenda that they will be taking forward to their desks, to their offices, to their countries, and continue working on some of these major targets that we have. So I think, to come back to your question, that coordination effort rests with all of us. And we as the HRF is one of the most premium and largest platforms across Africa that convenes stakeholders, definitely have a role to play in that as well.
All right, thank you so much, Ms. Ban. Ms. Jennifer Ban is the Managing Director of African Green Revolution Conference and shared her thoughts with us on building a resilient food system in Africa. Thank you so much and enjoy your weekend. So moving on now, global credit rating agency Fitch Ratings has affirmed the African Development Bank's credit rating at AAA with a stable outlook. Fitch says that the AAA rating was driven by the extraordinary support of the bank's shareholders. Fitch views the bank's risk management policies as conservative and assesses them as excellent in line with AAA rating peers. Concentration risk is low, with the bank's 5 largest exposures accounting for 32% of total banking portfolio at the end of 2020. Meanwhile, the board of directors of the African Development Bank Group has approved a $20 million flexible loan to finance Seychelles' governance and economic reform support program, expected to help to drive the island nation's macroeconomic stability and recovery from COVID-19 in the medium term. In Tunisia, the country has reported that investment in the services sector jumped 22.9% during the first half of 2021, reaching 542.4 million dinars against 441.4 during the same period last year. Of this investment, 17.5 million dinars were in the totally exporting regime and 524.9 million dinars in other regimes. The declared investments with foreign participation amounted to 28.7 million dinars, including 17 million mixed investment and 11.7 million of 100% foreign investments. Uganda Revenue Authority recovered a combined 651.7 billion shillings from tax enforcement measures resulting from civil and criminal investigations, interceptions, seizures, and litigations during the 2020-2021 financial year. The 2.651 billion shillings, which represent 14% of total revenue collections, was part of the growth that URA registered during the just concluded financial year, despite closing with a 2.3 trillion shillings revenue deficit. During the period, 67.7 billion shillings was recovered from over 5,000 seizures, of which almost 5,000 of them were dutiable goods, while 980 seizures were on the non-dutiable goods. The seizures resulted from a number of offences, key among them under declaration, which contributed at least almost 60%, while misdeclaration contributed about 20%. The African Development Bank Group and the government of Ethiopia have signed 2 separate grant agreements for new projects to boost youth employment and electricity trade between Ethiopia and Djibouti. The grants will fall under the bank's group's concessional lending window, the African Development Fund, and will go towards the productivity enhancement to support agro-industrial parks and youth employment projects worth $47 million and $71 million, Ethiopia-Djibouti's second power interconnection project, which aims to boost electricity trade between both countries. The industrial parks and youth development projects will see the development of irrigation and water management infrastructure around the integrated agro-industrial parks, offering opportunities for graduate agripreneurs to establish agro-related commercially viable businesses. The $102 million venture is being co-financed by the Arab Bank for Economic Development in Africa, with $5.25 million contribution by the Ethiopian government. And that's it on the program for today and this week. Thank you so much for watching. I'm Ini John Mekwa.